What's up guys, welcome back to InvestingPH. So we have another good news for us dividend investors, though this news was actually announced months ago, but last month was the only time brokers applied it to their platform, which was to remove the 20 pesos minimum fee. Now we don't need to use those 8K rules whenever you invest because our fees, no matter how small your trade is, would be 0.25%. Back then when you traded below 8K, you would get that 20 pesos minimum fee, which if your trade only amounts to 1,000 pesos, you would be paying 2% because of that minimum 20 pesos fee. But now it's only 0.25%. So how does this help us dividend investors? Well, just imagine, whenever you get dividends, you can easily reinvest it back without worrying about paying so much in fees. So the more you can easily tap into that snowball effect immediately. Or when there's an undervalued stock, you can easily invest in it using the dividends you got without paying so much. Because not all of us get more than 8K from our dividends every month. Now there's no waiting period. If your money is enough to buy the minimum lot size for that stock, you can invest in it immediately. Though these are small percentages, over the years it will compound as well. And as a dividend investor, paying 20 pesos for a small trade is like paying a 1 year's worth of dividends. So simply more returns for us investors. What a very good news. The PSE is slowly moving towards how other markets like the USA work. Though we still have that limiting factor of lot sizes, in other countries, you can trade as small as 1 share, some even fractional shares, though you can still have a way with this using the odd lot, but the liquidity there is so low, and you won't even get the same price as a normal lot. Usually it is a lot higher. But anyway, this is a good step for our market, because why? If you make it cheaper for investors, well of course, the higher chance we can attract more investors, so hopefully more upgrades will be done in the next years. For the month of May, my portfolio's value is 2,857,571 with a total gain of 366,821 or 14.73%. This is from my total invested money of 2.49 million. The returns are slightly lower compared to last month as the market has gone down again. We started May at the 6,700 level, now we are at 6,379. Though this wasn't our lowest point in the last 12 months, it was in October last year where we went down below 6,000. So here comes again the PSE haters in the comment section saying the PSE is rigged, it will never go up, we shouldn't waste time investing in the Philippines. Well, maybe if social media was already popular back in 2006, we would also hear these kinds of remarks because the PSE has lagged for a long time back then. In fact, the PSCI in 2006 is at the same level as it was in 1994, also in 2010. I could already imagine how negative the view of investors was to our market back then, but maybe in 2018, when the market has continuously gone up, a lot of investors come buying in again. A lot of so-called experts say it will climb continuously. This had been the cycle ever since. This isn't something new. In fact, even if you read old books about a market, like Benjamin Graham's Intelligent Investor, these reactions are so common. But for value investors like Warren Buffett or Benjamin Graham, when prices go down, they go dumping a lot of cash because these are times where you have a higher chance to earn more money. It is not when markets are up that you will earn the highest. Just imagine if you didn't invest in 2000 to 2006 because the market wasn't doing well and you had another chance to invest yet again in 2008 to 2010 before the market went up big time, you would have lost a lot of money because you gave that chance away. If you only thought of investing in 2018 when markets are at an all-time high, then of course you would be in a big negative right now. However, this isn't the case for me, as I was already investing in 2019 when a PSE was still at the 8,000 level. My returns went positive because I continuously bought during the pandemic crash and I continuously reinvested my dividends. So if another market rally comes again, my portfolio is prepared to ride along with it. I won't be riding in the middle or at the top, but I am with it while it's at the bottom. We don't know when it will start climbing. The same thing as the worries of investors who invested in 1993 to 2010. No one could have predicted the market would continuously climb for years after 2010, but for those who continuously invested at that time are now racking a lot of returns. Even during the pandemic, they would still be positive big time. So that's why I never listen to those haters because I have a very comfy position here. My dividends have already hit 6 digits and is continuously growing over the years as I wait patiently for the ride to go up. And even if it goes down, I am willing to buy more, which means more dividends for me. This is my mindset towards the PSE, So you can judge me after 5 years if the market is still stagnant, but even if that happens, my dividends in my portfolio would have still grown by that time, and I'm still in a comfy position while I'm waiting. This is an amazing video to watch. This is from DRAGONFI's channel. This is an interview of ANC with the CEO of DRAGONFI. John showed the side-by-side graph of the PSCI and the S&P 500, but without the Magnificent 7. These 7 stocks are the ones driving the US index to skyrocket upwards. So as John said in the video, if you blunt the effects of the Mag 7, there's greater convergence between the performance of the US index and our market. So our market is not actually performing that badly. In fact, even without the help of such stocks like Amazon, Google, Tesla, and Microsoft, if you compare the PSCI's performance from the very beginning, there are a lot of years where the PSCI outperformed the US market. The only time where it went up higher than our market was after the pandemic. Though yes, this still does not change the fact our market is still down and our market is lacking those popular stocks. But if you look at the fundamentals, companies here have already gone past their pre-pandemic level, so we are recording record high earnings. So for me, those are just my thoughts. I won't wait for our market to go up before I invest. I will invest while it's cheap. Of course, I still follow my strategy of buying great companies that give consistent dividends and are trading at a fair price. Anyway, I suggest you watch the interview. You can learn a lot from it. There's a link below. So that was a long talk. Let's continue on with my portfolio update. Last month, I earned a dividend income of 16,339 pesos. This puts my 2024 dividends at 61,431. In my latest 12 months, this from June 2023 to May 2024 is 140,941, or a monthly average income of 11,745. Whenever my monthly income climbs, I always remember my first years where I earned 162 pesos and 8,700 for the whole year. Now it's at this level. It just makes me so happy. I get to earn this amount without doing anything. The stocks that paid last month were China Bank, DTMPR, and DMC, and I'm really looking forward to June because it may be the biggest dividend income I'd be getting. AREIT, Costco, FLI, Globe, LTG, MREIT, and Pure Gold will pay, and the gross amount is 37,000. Just imagine, that is the biggest monthly dividend income I've got so far. After taxes, it would be more than 33,000. This would break my March dividend income of 30,000. So this is the second time I'd be getting a 30k dividend income in a month. I just wish every month would be like this. Now, if you like all the functions you are seeing right now and want to experience more like getting news, a very nice market calendar, research, dividend screeners, and even an intrinsic value calculator, and so much more all in one platform, then sign up using my link below to DRAGONFI, and both of us can get up to 1,500 pesos. And I forgot to tell you that all of these functions are available in their mobile app as well. How great is that? And to add even more tools for your investing journey is another great platform you can use, which is simply Wall Street. You can get this portfolio tracker, wherein I can see how my portfolio is compared to the index, watch lists where I'm updated whenever the company releases dividends, earnings, when insiders are buying or selling, and when the stock falls below its intrinsic value, and also a great stock screener where you can put in whatever ratios and fundamentals you want a company to have. So this way, you can easily filter stocks easily. You no longer need to waste time looking at financial sheets one by one, and the best thing about it is how they present their data. It's so easy to understand, even for a beginner investor. This makes your investing journey so much easier. So try it out now. They offer a forever free basic plan, and if you want to avail of their paid plan to get unlimited access to all the tools and research, then use my referral link below to get up to 40% discount. So DRAGONFI, my broker, plus Simply Wall Street are all the tools I use. That's why I show it to you guys every time, as they've really made my investing journey so much easier. So going back, the stocks I bought this month were DNL, and I noticed Costco and Pure Gold's price hadn't gone up even after announcing their dividend pay, so I bought more of it. I was actually surprised the two will pay another round this year, as this is the first time they will pay twice in a single year. They usually give their dividends in January. This means the yield I got from Costco is 8.66% and for Pure Gold 5.8% for the average price I bought it. This is the highest pay I got from the two companies, almost equal to the yield of my REIT stocks. I also bought more shares of AREIT, so it's now 4.6% of my portfolio as I kept on buying it for a couple of months now. I really like investing in REITs as it gives quarterly dividends. I've mentioned this a couple of times now that I usually reinvest the dividends to a company in my portfolio that will still pay dividends for the year, so it will already compound. So with REITs giving quarterly dividends, I can maximize this strategy of compounding dividends in the same year. Now, a REIT's price is still below my buy price, so I'm just taking the chance to buy it as the price has stayed around 33 to 34 pesos, and I will continue buying it if the price remains the same. I am comfortable making it my largest REIT investment as the company just continues to grow its earnings and dividends consistently. Now, do I plan to add another REIT to my portfolio? Well, yes, I'm looking at investing in C-REIT, although it is a real estate investment trust, but I don't look at it as a real estate stock as the company is more or less in the energy sector, which I want to increase my exposure to. I could no longer buy AP and FGen as the price is still quite high for me, so this is a good addition to add more exposure to the energy sector, and its dividends is 7%, which is a very good yield to me. Now, why haven't I bought it yet? Well, my money's still focused on adding more to A-REIT as of the moment, but if C-REIT's price remains the same, it will definitely be my next buy. So with that is it for my portfolio update for May. I hope you've learned something from this video, and if you did and still haven't clicked the like button, I'd appreciate it if you do so before leaving. Thank you and see you in the next video.